Six stocks I'm buying now, November 2023 edition. Welcome in, folks. I'm about to get into and show you the six stocks that I will likely be buying in November 2023, why I'm buying these stocks, going over my bullish thesis. This is always my favorite video I record on this channel each and every month. And I want to, first off, thank everybody for tuning into this one here today. Sit back, relax. This is going to be a pretty insightful video we got to go through here today. And I want to just say I appreciate everybody that's being subscribed to the channel as always, okay? Now, before we get into these stocks, I thought it was important I show you this. This is a 2-year chart for the stock market indexes, all four of the major stock market indexes. This is a 2-year chart. This is a Dow Jones Industrial Average, the S&P 500, the NASDAQ, and the Russell. Now, we're going through an extraordinary time because on a 2-year, the Dow is down over 8%, S&P 500 is down about 10%, the NASDAQ's down over 17% in the past 2 years, and the Russell 2000 is actually down about 28% in the past 2 years. And so I just want everybody, before we even get into today's video, just to understand that if you are somebody that is buying stocks over this next 6 to 12 month period, just understand you're doing it at a pretty opportune time. Because it's very rare, if we look at the last, let's just say 40 years in the stock market, it's very rare you could ever buy stocks that are, let's call it the indexes are lower than they were 2 years prior. Never mind substantial numbers lower than they were in prior years, which these are substantial numbers. We talk about a Russell 2000, small cap stocks down 28% in the past 2 years. That's a pretty extraordinary move. So just understand you're likely buying in this next 6 to 12 months at a pretty good time to be a buyer in the market overall. Not the best time to be a seller, but in terms of being a buyer, absolutely. I appreciate everybody joining me here today. Two things to run through before we get into this. One is I am on Twitch now. That will be the main pinned comment down there. I basically do a show Monday through Thursday and run through the last hour of market trading, as well as basically after hours. So I go through the earnings reports, and like this week, for instance, if you're watching this way in the future, these will already be over. But this week, AMD's reporting, PayPal's reporting, Elf's reporting, Airbnb, Etsy, Apple. I'll be reacting to all those earnings reports live on there. So it's absolutely free to follow me on there. So you definitely would make sense if you're really into the stock market. And the other thing is, if you're looking to get access to all my courses, join my private group, get part of the 6-figure, 7-figure club, all those sorts of things, then check out the pinned comment down there. You can fill out an application and we can get you in there this upcoming week. All right, guys, let's get into this. First stock up here, I thought we'd get the easiest one out of the way, because I know everybody watching this video knows before you even watched it that this stock was going to be in it. And I said, let's just get this baby out of the way first and foremost, and then we can get into the other 5 stocks. And that first stock is PayPal. PayPal. If you're a true watcher of this channel, you knew this one was going to be one of the 6 stocks. There was no debating, no contemplating. Some of these other stocks might surprise some folks. This one's not, okay? PayPal. Steal deal. This is the number one stock I have been buying the last several months and plan to continue to for the next few months, okay? Here's what we're looking at with PayPal. Forward P on the stock of 10, which is just a complete joke now at this point in time. $55 billion market cap. It's down about 42% in the past year. Now, where I want to start is you got to understand PayPal owns many different businesses, okay? There are 2 main businesses that people know are what's called PayPal and Venmo. Now, this is in the United States of America, most downloaded finance apps on a daily basis, okay? PayPal's number 2, Venmo's number 3. That's what I call MMS, major market share. No one has the sort of market share that PayPal has. When you have 2 of the top 5, or we say 2 of the top 3, most downloaded finance apps on a daily basis, it's incredible, right? But they're not just big in the United States. PayPal's big really in many parts of the world. United Kingdom, PayPal is the 3rd most downloaded free finance app. If we look at, this is Canada. PayPal's numero uno, top finance app in Canada. If we look at Germany, number 1 most downloaded finance app, PayPal. If we look at France, number 3 most downloaded finance app on iOS, iPhone, PayPal. If we look at Italy, number 2. If we look at Australia, number 3 most downloaded finance app, right? This is incredible. Now, there's also an interesting phenomenon that's going on recently, which is actually, I've watched in the United States, PayPal actually become more downloaded than Venmo, because I've seen many times in the past where Venmo basically would overtake PayPal, but recently, PayPal's now moved up to the number 2 most downloaded app, and it's actually surpassed Venmo here recently, and it makes you think, like, how is that? Like, why is that? Considering Venmo seems so in with especially a lot of the youth, teenagers, people in college, like go to a college campus and try to get somebody to transfer you money. Every single college campus you go to, they're all going to say Venmo, Venmo, Venmo. That's the thing, okay? Venmo is the thing. And yet PayPal's actually surpassed it recently. So there's an interesting phenomenon that's going on. I don't know if you guys are aware of this, but I think everybody should be aware of this. The number one top app, downloaded pretty much on a day in and day out basis, is an app a lot of people might not have heard of, or maybe you have heard of this. It's called Temu. Temu, shop like a billionaire, okay? And this has gone insane the past year since it launched in the United States of America, okay? Now, a lot of people using this service do not want to give their credit card or debit card information. And I don't know why this is. There's some people that think that Temu steals their information or whatever, okay? I have no opinion of that. But what I can tell you, this is an insane benefit to PayPal. And do you know why? Well, PayPal's one of the top things that is offered to pay. So a lot of people either don't want to pay with credit card or debit card because they feel like their numbers can be stolen or whatever, right? And so they use PayPal. And then just a lot of other people in general just love to use PayPal as a checkout method anyways. I do that all the time. Like if I have a PayPal option, I just click on it because it just scans my face and boom, it's right through. There's no like I have to go get my wallet and go see what credit card I want to put on it. It's already hooked up. It's simple, right? And so this is an interesting phenomenon. Now, analysts have started to pick up on this over this past month. I have seen some analysts really talk about this in the past month or so, okay? PayPal's branded checkout button is poised for growth amid China's Temu surge. And so this Temu thing has just gotten PayPal a lot more relevance, just to be quite frank, and it's almost happened overnight. Now, if we look at PayPal's income statement, it's been phenomenal over the last several years. From 2018, they did over $15 billion of revenue. On the trailing 12 month, they're up to over $28.5 billion of revenue. Operating income went from 2.2 billion to now $4.7 billion in operating income just in the past few years. That's an extraordinary move there, and it's not done anytime soon. Also, PayPal's a phenomenal company because they're known for beating earnings estimates quarter in, quarter out. If we look, this is past many quarters. Look at this. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. This is past 13 quarters for the company. In the past 13 quarters, they missed on EPS one time. One time in the past 13 quarters, and it was only by 1 cent, by the way, the miss. So it was like super small. So basically, this is a company known for beating analyst expectations. Now, why that matters so much is one, it helps win over Wall Street long term, but two, this means likely, especially if the company continues to beat, which I think they are, all these analyst estimates you're looking at are too low for this company. Because keep in mind, what does PayPal come in and do? They beat analyst estimates, quarter in and quarter out pretty much, right? And so naturally, analyst estimates are going to end up being too low for this company over the next several years. So although it looks like a paying a 10 PE, which is insanely cheap for a company like this, especially growing the way it is, it's very possible it's a 9 PE in terms of this year's numbers. It's very possible next year is actually trading at a 7 forward PE and not an 8.9 PE or whatever, right? So that's a very important thing that I think everybody should understand out there, is you could be actually paying a much cheaper price today than you think you're paying based upon the fact that this company pretty much beats almost every single quarter, right? Now, on the balance sheet, the company is sitting on around, let's call it a little close to $10 billion of cash and short-term investments. And there's something going on. If you want to say, like, this stock price being low right now, okay, it's such a huge benefit for two specific people. One is people that are buying the stock right now, people like myself, okay, and maybe some people watching this video or whatever, right? We believe this is an extremely discounted, undervalued stock that's going to boom over this next couple years. The other group, and this helps PayPal immensely, is right now, as I speak, PayPal has a massive share buyback on, okay? The cheaper your stock is, the more shares you can buy back, right? And so it's an absolutely beautiful phenomenon PayPal has going on. It's the best thing you could possibly ask for. Because here's the deal, okay? If we go back, they were buying about $667 million of the stock back. Then they bought $939 million, then $953 million, then $1.4 billion, then $1.44 billion, right? Maybe this past quarter they bought $1.5 billion or back. We don't know, okay? But the bottom line is, it's the best situation when you can buy back your shares for insanely cheap prices because you can buy more shares. No different than if PayPal stock's $100 today versus $50, I can buy a lot less shares at $100, right? Absolutely beautiful. Now, we got a new CEO who's incoming here, Alex Chris, who I believe should do a phenomenal job. We'll see how he does over time. He has a lot of great experience from Intuit. Intuit was a very loved stock in the market over the years and one of the best business models out there. And I've already seen Alex Chriss very early on. He's already making moves. He's selling off their Happy Returns business to UPS, which I think is an interesting direction. So it's very clear to me where Alex Chriss is kind of sending this company. He wants to send this company into very focused on PayPal, Venmo, Braintree. We'll hear what he has to say on the conference call this week, but my belief, and I'll react live to that on Twitch this week, the conference call, but my belief is he wants to focus his business PayPal, Venmo, Braintree. Everything else can be everything else. There was a vision in the past, especially in like 2021, of like trying to become an overall e-commerce company. I don't think that's where he wants to take it. And seeing a move like this kind of shows me that's where he wants to take it. Now, Braintree is not talked about enough in regards to this business. Everybody thinks about PayPal, Venmo. Braintree's a magical service on the back end that helps companies basically run transactions and do it in a very seamless fashion. And they've got a ton of customers that are very important customers, right? And the thing that makes Braintree so magical, in my opinion, is nowadays people like to pay a lot of different ways. It used to be, everybody just paid with a credit card if you bought something online, and that was that. But nowadays, people want options to pay with credit cards, debit cards. They want PayPal as an option. They want Venmo as an option. They want Apple Pay as an option. They want Google Pay as an option, right? They want Visa checkout. They want to, different people like to pay different ways. And so somebody like myself, I use PayPal all the time. I use Venmo maybe once a month, not as often. I use PayPal usually every single week, right? Other people might like Apple Pay. Other people might like Google Pay. The bottom line is you got to have all these services, and the less options you have, the less revenue you're going to make over time. The more options you have, the more revenue you're going to make. If somebody's payment method is not there, that's not good as a business, right? And there's been a lot of studies done over time that if you have PayPal as an option, your sales increase quite a bit, right? Now, the stocks move down so considerably that I have to ask myself, am I making a bad decision here, right? Because there's one of two scenarios and there's no in between. Either I'm wrong on the stock or the market's wrong on the stock. Either I'm wrong or the market's wrong. Now, I did a lot of thinking about this. And I thought about everything across the board. I thought about the competition, which the competition is nothing new. The competition has been there for a decade. All these other services and possibilities have all been there for a long time. I see day in and day out, PayPal and Venmo, the most relevant payment services pretty much out there, around most of the developed world, especially most of the Western world, right? I see this company executing on their numbers. I see the valuation where it's at. I think about recession. I think about risk reward. I think about the balance sheet. I don't think I'm wrong. I think I'm right. And I think the market's gotten this one very wrong. And I mean incredibly wrong. And I think by this time next year, they're going to be trampling over themselves to buy this stock. And I take it back to Meta. Everybody was so convinced on Wall Street last year that Meta was done. They were cooked, okay? And then you had other people saying, well, if Zuckerberg, and this is my shares I own in Meta, I'm up $327,000 now at this point in time on Meta stock, right? And people can't wait to buy those Meta shares from me, and I'm not selling them. And they're going to have to pay $600+ for those Meta shares someday, right? And it was either I was wrong or the market was wrong. And on this one, clearly the market got this one wrong, right? And you know what's funny is the market said, oh, Zuckerberg, he's got to pull back on the spend of the metaverse and all this stuff. Has he pulled back? No, the man's still spending a fortune. He's still losing a fortune on that. But yet people are over them, they're, trampling over themselves to buy the stock at $300+, and they'll be buying it at $400, and they're going to be buying it even heavier at $500 and $600. That's the market we play in. And so I believe this is a meta type situation, and believe I'm going to be right then. Now, the stock's reporting earnings this week. Let's say it goes up. Obviously if it goes down, I'm going to still be buying it. But what if it goes up? What if it goes to $55 after earnings? What if it makes a big pop? It pops to $65 after these earnings come out Wednesday, which once again, I'll react to the earnings on Twitch and listen to the conference call and all that, okay? My bottom line is I'm buying the stock all the way into the first quarter of 2024. At some point in the first quarter of 2024, I will be done buying PayPal. My position will be fully built out, and that will be that. And I won't buy any more shares moving forward after that point. And it will just be a simple hold because I'll have everything I want it to have in PayPal. And if I look at the risk reward, that's that. Okay, so it doesn't matter. PayPal could go to $75 on earnings. It's irrelevant. I'll sell PayPal maybe when it's $300. Like, I have no interest in selling PayPal anytime soon over the next few years. Okay. Now, also, I do believe fintech in general comes back to life in 2024. This space, let's just call it the fintech space, has been hit for almost 3 years now at this point in time, certainly 2.5 years plus. I believe a lot of these stocks, if not all these stocks, actually start to come back in life in 2024, and I believe PayPal will be just one of many beneficiaries in the fintech space overall here, okay? So that covers PayPal. Very bullish on PayPal, and that was the most obvious one of all these stocks, okay? Number 2 stock up here. This one might surprise some people. It might surprise some people. I'll be honest with you guys, okay? Number 2 of these 6 stocks that I will be likely buying in the month of November 2023 is, get ready for it, Palantir. PLTR. This stock has treated me very well, up 66% on it, up $32,000, okay? Man, Palantir, it's actually gotten interesting. Again, it's down the $14 range, and here's the deal, okay? I think analysts are wrong on this stock. The stock looks like it trades really rich, right? It looks like it trades at very high valuations. You look at what's expected for analyst expectations for next year's earnings, and we're trading at about 56 times. That's a 56 forward P. Now, coming off of a PayPal we just looked at, I mean, it's trading at 2024 numbers of what, 8 times, 7 times, 9 times, depending upon where your numbers are at. So Palantir looks like the world's most expensive stock. I do not believe analysts are correct, okay? Here's the deal. Palantir just entered what's called an infant stage of profitability, I call it, okay? This is when a company just starts to hit profitability. Now, usually when a company hits infant stage of profitability, over the next several years, their growth clip is rapid in terms of earnings per share. It grows rapidly and a lot faster than really anybody's anticipating. Analysts have this company's earnings per share only growing 17% in 2024. For a company that's at infant stage of profitability, I just don't see that, folks. I don't see that. I think they're going to way outstrip that growth rate. I also believe their revenue estimates are too low as well. Based upon all the traction I'm kind of seeing out there in the market, I don't believe those numbers are accurate, okay? And so this is a more inaccurate numbers. Like I believe revenue is way too low in terms of analyst estimates, but I believe the earnings per share are massively wrong. Massively wrong. And I think everybody's going to see in 2024 and 2025 that, whoa, this company's getting to way bigger profitability and cash flows than a lot of people anticipate as of right now, okay? Now, Palantir also has an insane balance sheet, which makes me sleep well at night, right? It's always great if you can buy companies with great balance sheets. The crazy thing about Palantir's balance sheet, this is as of last quarter, $3.1 billion in cash and short-term investments. And guess what their total liabilities, if you added up all their liabilities on the entire balance sheet is? Guess what that number is? Here it is. $945 million in liabilities, total liabilities. That's insane, man. That is absolutely insane that they have, let's call it 3x roughly in cash and short-term investments versus liabilities. Like, that's crazy number. Crazy number, okay? Now, Palantir's in a sweet spot right now because they have best-of-breed products. The government's really starting to realize that, right? And so Gotham and Apollo are going to just continue to tear it up over these next few years, and you see a lot of government contracts look like they're starting to come in left and right? And on the commercial space, which just think of it as a company space, a lot of folks are interested in AIP, which is ultimately, right, at least as of right now, it seems like it's a Trojan horse for Foundry. And so expect the commercial business to likely grow substantially faster over the next several years than we've seen over the last several years. Let's just put it that way, okay? So this is kind of I'd call it a beautiful sweet spot for the company where they got government coming in and they got the commercial business roaring. Now, I have a lot of people in the private stock group who have worked with Palantir in the past, okay? And are very well aware of the products Palantir has. Because a lot of people don't understand the product. It's not like an iPhone that you can play with and understand it, right? Here's what I've heard from people that have joined my private group over time and have experience with this actual product, and even people in the military that have experienced this product. I have never heard anybody say anything bad about Palantir's product ever in the private stock group or just in general. And I've dealt with quite a few people now that deal with this product on a day in, day out basis, either on the government side or on the commercial side, and I just can't find anybody that says, oh, Palantir's product's not all that. It's a bad product. No one says that. Everybody says it is a best-of-breed product. It's an extremely in-depth product. It's the best in breed. And I just think there's a huge value when you have a best-of-breed product, when you have something better than what everybody else has, right? There's an inherent kind of As more and more folks find out about this, they tell more and more folks, right? So as more and more governments use this, they're either going to tell, let's call it friendly other governments, right? Or they're going to explain to other government agencies that, hey, this product works. It gets us results. If a company uses it, it saves us a lot of money. And then those executives go to other companies, and then they're like, what the crap? We got this garbage that we're using. We need to get Palantir in here, right? Because think about it. If you use Palantir at company XYZ, and you move, and you're let's say you're the CFO of that company, and you become the CFO of ABC company, right? Or whatever position that's a really important position, and you look at your software and you're like, we're using this? Why do we not have Palantir? You're going to bring on Palantir. So it starts to become like a snowball effect, right? Of like more and more people telling more and more people, and you start to just have really the customers do the work for you, which is a beautiful, beautiful thing. It's the best thing in business. Like word of mouth is always the best thing in business, right? It's no different than I remember my dad, had a pool business, right? And I grew up in the pool business, cleaning pools and stuff like that. My dad's service was always impeccable, right? He always made sure he was on top of everything. He showed up on time. Like it was always perfect. And he never advertised. He never spent a dime in his life on advertising. All his customers and how he provided for our family, right, was all from word of mouth. Every customer my dad ever got was from word of mouth. Think about that for a moment. And he built a successful business and, was able to get us out of, poverty and get us into the middle class from word of mouth. That's the most powerful thing in business, folks. Let that hit you for a moment, okay? And so just understand, when you've got best of breed products, word of mouth is everything. You don't need to spend a fortune on advertising if you really got it like that, okay? That's the bottom line. Now, earnings history. Carp and the executives have done something very important here recently, other than just getting to profitability. Something very important just happened, okay? What this is Carp and the executive team has started to understand the game of Wall Street. I could tell when these guys went public, they just didn't get it. They didn't get it. That was like, I could just tell, like everything they were doing, like the way they carried conversations, everything, like I was like, they don't understand Wall Street. They don't understand what Wall Street wants to see. And that's why you saw the stock go to $5, $6 last year, right? Now they get it. So look at this. This was a company that would miss quarter in and quarter out in EPS. They missed here. They missed there. They missed there. They missed. You can't do that. That's how you become a penny stock. That's how you become a $5, $6 stock like Palantir became last year. You know how you get out of that? You start beating on earnings. That's a beat. That's a beat. They came in line there. Wall Street wants to see you beating numbers or coming in line. That's the game of Wall Street. And so Carp and the team, I think, is starting to realize we got to start coming in, at least in line, but likely start beating these numbers so then Wall Street can start to look at us, investors start to look at us with confidence, rather than everybody being so scared going into earnings, right? The worst thing as investors when you're scared going into earnings because you know that company usually misses and you're like, oh, I'm not so worried about these numbers. The best feeling possible is when you go in confident. Like I went in last week with Amazon Meta earnings. I knew Amazon was going to come in and smash it. I knew Meta was going to come in and smash it. Based upon everything I understand those businesses, I knew they would kill it. Sure enough, they did it, right? That's where Palantir is going to. That's where they're going to get to, where people are going to start becoming very confident in their earnings reports. And, that's an easier feeling as an investor, right? And you also attract more traders in the stock, which some of those traders end up turning into longs as well, right? Because traders don't want to buy a stock going into earnings if they're usually pretty convinced that the stock misses earnings, right? Something very important there. No, S&P 500 inclusion could be still coming for Palantir overall, so it's something, I think it's something important to keep in mind here in regards to stock price. When does it happen? We'll see. We'll see when S&P 500 inclusion. I would guess at some point in 2024, we get an S&P 500. It is not guaranteed, but Palantir is starting to meet every criteria essentially you need to have to get into the S&P 500. And so I would say it's a pretty high probability that we're in at some point in 2024. It's just a real question of, is it the first quarter, second quarter, third quarter, fourth quarter, okay? Now, Palantir used to be like a $35+ stock, right? If we go back to, this was like peak market bubble, January 2021, right? The stock reached $35, or I think it was actually above that, but as far as trading view, it has at 35. I think it actually could take that out in the next 24 months, unless we have a market crash. If we have a market crash where it gets way worse than what we already have going on, maybe we're not taking that out. But I'm pretty confident based upon what I think is going to happen with EPS over this next few years, the sort of money I think Palantir is going to be able to attract, also getting into the S&P 500, I think there's a real possibility we could take that $35 price out in the next 24 months, folks, okay? So overall, I'm very bullish on Palantir. I can't wait to hear these earnings. I can't wait to hear guidance. I think they're in a sweet spot for the next several years, and I think they're going to become a cash flow machine. I think they're going to become an ATM. That's the bottom line. That's my view of Palantir. They're going to become an ATM of a company. And then they're going to be able to take that money and potentially do more share buybacks, which will obviously help the EPS as your net income starts to pile up, right? And then you can buy back more shares. It obviously helps your earnings per share. Then when everybody was talking about SBC a couple of years ago, right, stock-based compensation, that becomes not even a factor anymore. So bullish on Palantir, and I could actually start buying some shares again in the month of November. We shall see. Third stock up here are these 6 stocks that I'm likely going to be buying in the month of November. Very bullish on this one. It is Shopify. Shopify stock. It has had a tremendous past 5 years, okay? Tremendous past 5 years. It has had a really rough past 2 to 3 years, but it's had a tremendous past 5 years, okay? Now, the story with Shopify all starts with this gentleman you see in front of you right there, okay? That gentleman's name is Toby. Some call him Tobias, but everybody else calls him Toby, okay? Now, Toby is let's call him the founder of Shopify. And he's the one that's built this business into the giant it is today, right? And from a obscure company no one ever heard of to a company that got on the map with like Kylie Cosmetics and what she was doing there back in the day, many years ago. And then nowadays, like Shopify is almost a household name if you run any sort of e-commerce business, right? And Toby seemed like for a bit there, he might want to take the business into being more of an asset-heavy business and bought several different services. And it seemed like, man, is he going to try to compete against Amazon, right? He decided that's not the way to go. And so he's taken his business back to asset light. Now, it's a very important change in the business model, and it completely changes the financials of a business model when you go from we're going to be asset heavy to asset light, okay? Here's the deal. Asset light businesses are businesses like Apple, Microsoft, Google. These are asset light businesses. Now, do those companies still have assets? Absolutely. They got server farms and all the different stuff they have. But those are definitely all three considered very asset light, okay? And look at the net profit margins of these companies. Apple's a 25% plus net profit margin. Mr. Softy's a 36% net profit margin. I mean, that's incredible, right? Of $198 billion of revenue coming through the door, 72 made it down to the bottom line. That's insane. Google, 25% plus net profit margin. That's the beauty of asset light, right? Now, if I look at Shopify, if I look at Amazon, for instance, right, which Amazon stock I own, I love Amazon. It's a great company. But Amazon's very asset heavy. Now, Amazon's put in all that hard work over the past 20 plus years to become an asset heavy company that is just impossible to compete with on their particular space, right? And so it's a thing of beauty, but it's almost impossible to pull off what Jeff Bezos, Andy Jassy, and the team has pulled off at Amazon. It's almost impossible, okay? But if you look at Amazon, it's an asset heavy business. And this is a company that, check this out. $143 billion of net sales in the last quarter, and only $9.8 billion made it down the bottom line. So Amazon's going to end up being $1 trillion plus revenue company a year. Think about that for a moment, right? But of that trillion plus, a very small percentage is going to actually make it down the bottom line. I mean, if you look at Amazon, we're talking about 6 to 7% net profit margins, okay? That's the difference between asset light and asset heavy. So what you're going to see with Shopify over time is something extraordinary. And I don't think analysts are prepared for what it's about to happen with Shopify. And what's about to happen with Shopify is our profitability is about to skyrocket in an epic way in 2024, 2025, and in future years. And you're going to see so much of every dollar that comes through on the top line reach that bottom line. It's going to be incredible. The operating leverage that's going to start to basically happen in this company is going to be amazing. And so when you look at this company, it looks like, it's kind of a rich stock, right? 59 times basically 2024 numbers, 45 times 2025 numbers. I don't think those numbers are close. I think they're going to blow those out of the water. And I think what you're paying for Shopify today is a far cheaper price than what it says right there, okay? And I think that's going to be proved out over this next 24 months. And people are going to say, whoa, Shopify's starting to put up some crazy profits, right? Also, if you look at Shopify's balance sheet, it's a grade A balance sheet. It's as pretty much just about as good as you can possibly get for a balance sheet. So it makes me sleep well at night, okay? Another question I like to ask myself sometimes is when, this is kind of like a beautiful trick I would highly suggest everybody do this in the future, folks. You got to ask yourself, when does this company stop growing? And there's a lot of companies that you could say, oh man, this company could be topping out this year or in the next few years, or maybe it's kind of there. It's going to be hard for them to grow moving forward and things like that, right? There's certain companies that it's like, I don't know when they stop growing, but it's so far from now, I can't even imagine it. Amazon's a great example of that. A company that, I don't know when Amazon stops growing. Like maybe in 2040, 2050, I don't know, 2090. Like someday Amazon will stop growing, right? It'll start to decline, but it's so far from now. Shopify is the same exact business model. It's in terms of like, how far does it grow? Like, I don't even know the day Shopify stops growing. Like, it's so far from now. And it's beautiful to hold a stock in which it has so much growth trajectory that you're like, I don't even know when this baby stops growing. It reminds me of if you were buying Apple in the 2000s, right? Or even in the 2010s, where it's just like, so many products that it's like this, this baby's going to grow for such a long time. Like someday it will top out, but it's so far from now. And that's how I feel with Shopify. I'm like, someday this company won't be able to grow anymore, but it's not today. It's not tomorrow, and it's not a long time from now, okay? So, overall, love Shopify, and that will likely be a stock I'm buying. Now, this next stock, the 4 stock up here, folks, this is a surprising one. I'll be honest with you. This one came out of nowhere, and I could end up likely buying it in November 2023. Here it is. It is Align Technology, ticker symbol ALGN. Align Technology, actually a stock that's had a brutal past 5 years, down 15.5% in the past 5 years. But if you look at their income statement in the past 5 years, it's actually very impressive. Now, Align Technology makes, the clear aligners and braces and all those sorts of things, and they kind of have like a little bit of a monopoly business, in my opinion. I mean, they're in with dentists all across the United States of America and in other places as well. But I'll be honest, it seems like they kind of got a monopoly. They kind of got a monopoly on what their industry, and that's a beautiful thing long term, right? And it's not a big enough industry that really gets looked at from like a monopolistic perspective. Now, one of their only competitors, which this company could never get their financials together, but SDC, Smile Direct Club, they went bankrupt. They went under, okay? And so there was one of their only like serious competitive threats, just went bankrupt, and they could never get their financials together. So then, if anything, makes Align even more interesting, right? Because now they don't have to deal with the threat of like, oh, there's that company on the come up who, loses money like crazy, but maybe they can outgrow us over time. They don't have to deal with that anymore. Now, the company, and the reason the stock price has sold off so viciously recently is a lot of people are viewing this as a short-term top in the business model, right? Like, look at the last quarter, and they're now seeing deceleration in all the numbers, right? And not just deceleration, but literally the numbers are going down. Clear aligner shipments went down 3.3% on a quarter-over-quarter basis. If we look at net revenues for the company, went down 4.2% on a quarter-over-quarter basis. And so the numbers look like they've topped short-term, right? And they're all going down. Now, if we look on a year-over-year basis, they're all very positive there, right? Net income being up 24%. But the thing I'll say about Align is, even if you feel like this is a short-term top for the business model, and let's call it the next year is rough for the company, and the next 6 months, what is rough really? Because here's what we're looking at with Align. $960 million in net revenues. This is their latest quarter they just reported, right? If we look at net income, $121 million in net income for, let's call it a $12, $13 billion type market cap company, like, oh, that's pretty attractive. Now, they're going to be on the bad boy list from Wall Street for the next at least few months. And the reason is they missed on EPS and they missed on revenue. In this market, you can't, when I showed you guys at the start of this video, look at the 2-year chart of all the indexes, okay? We're in a tough market. It's a tough market for gains for a lot of stocks. You come in and you miss on your earnings per share and you miss on your revenue, you're going to be put on the bad boy list, and that's exactly where Align's put right now, right? Now, here's a beautiful thing, okay? The stock's now trading at, let's call it about 20 times expected 2024 numbers. Now, here's the deal. For a company that has pretty much a monopoly on their industry, I think that's pretty darn cheap. If they had a million different competitive threats, and I was like, oh, this company could be seen as the same as Align, or this company, then I might be a little worried, but they just don't have those competitive threats. And if anything, SDC proved, Smile Direct Club, right? If anything, they proved how hard it is to try to compete against these guys. It is vicious. And so, I don't know, man, it actually seems like a pretty darn attractive, and this one just came out of nowhere. And I'm like, this actually seems pretty interesting. Now, if I do start buying the stock in November, I'm going to nibble, okay? It's not going to be a position I want to, go all in right away or something like that, because it could be more damage ahead this next 6 to 12 months for the stock. So if anything, I'll just nibble on this one a little bit, start a little starter position, and then start to go from there, right? Alrighty, next stock up here. The fifth of these 6 stocks. This is an exciting one. This is a speculative one. It is Fubo. So this is my spec buy of the list here, okay? Stock's up about 32% so far this year. I think it has much bigger gains ahead. Why do I think that? Well, here's the deal, okay? By the way, if you don't know Fubo, it's a streaming service. They compete against YouTube TV. YouTube TV's always going to beat them for #1 spot, but it's completely irrelevant. All that matters is Fubo builds out a huge profitable business over this next 5 years, and the stock price will be a whole lot higher than $2 a share, right? No, here recently, the company hit all-time highs for Google Trends data in the month of September. I knew it was going to be a strong September. I mean, it's football season. Every time football season starts, it's always strong September for Fubo. But this was off the charts, folks. I was not expecting this. And a lot of that went back to Charter, and then Charter funneled a bunch of customers to Fubo. And so ultimately, Fubo likely saw a crazy subscriber number come in something much higher than what the company anticipated. That's my guess in regards to looking at the Google Trends, because the Google Trends over time has basically been able to tell you roughly if subscriber gains are really strong in Fubo or not really strong, okay? Now, also, here's the deal. I think their losses are going to be way less than what analysts are kind of anticipating here. One is I think the revenue is going to likely be far stronger than what analysts have. So analysts have the company growing revenues about 21% for 2024. I think they're going to be big there. I mean, big. Here's the deal. The ads business has been a laggard. That's going to likely play catch up, okay? The company's getting to scale, which when you get to bigger and bigger scale, you start to attract more and more advertisers, right? As you get to 1.5 million subscribers, 2 million subscribers, more and more advertisers, just naturally you start to attract more and more, right? You get in with more and more companies, and those ones advertise. And then on top of that, 2024, guess what? Elections, okay? So, nonetheless, the ad business is going to be booming for the company, in my personal opinion, in 2024. I mean, booming. On top of that, remember, I believe they're going to likely beat huge on subscriber numbers and expectations. So the subscriber numbers are going to pour in as well, right? Which is going to be a phenomenal situation. So I think they're going to be big on revenue, and I think that's going to help the bottom line in a substantial way. And based upon the leverage I'm starting to see in the business model and the financials that we're about to go through, I think they're going to have a slight loss next year. I can see anywhere between about 15 cents and 25 cent loss for the company in 2024, which is, let's call it, very small loss for the company. And especially comparing to where this company was a year or two ago, it was a disaster zone. I think they're going to lose way less than 64 cents, okay? Now, here's another component of this, right? If we just look at this past quarter, and remember, this trend is just going to get stronger and stronger over this next several quarters, okay? If we look at the second quarter of 2022, there was about a $90 million difference or so in the negative between revenue and operating expenses. That's recently dropped to, let's call it $50 to $55 million in this most recent quarter. I can see that dropping to $40 million, then it's going to drop to about $30 million, then it's going to go to about $10 million, and then we're going to go positive on this baby, okay? That's a trend I see. The trend's all lining up. The data's all lining up. The Google Trends data's all lining up. And so everything's absolutely perfect here, okay? Now, the company reports on Friday. I'm expecting a very good earnings report, and I'm expecting a stock price to be much higher on Friday than, let's call it whatever we are at today, $2.31. By the close of the Friday, I'm expecting the stock a whole lot higher than $2.31. Let's just put it that way, okay? Now, there's one other thing to factor in regards to Fubo, okay? And this is a serious thing that has to be factored in. Fubo could be an acquisition target. And here's why Fubo could be an acquisition target. They're right where everybody wants to be, streaming, right? Everybody's tried to build out these streaming services, and they're having a lot of damn trouble. Well, Fubo's got a successful streaming service. They're super successful at sports. They've attracted a lot of sports subscribers like myself. And the beautiful thing with that is sports is live action. Ads are always best on live action things. If it's something that somebody's watching pre-recorded, they fast forward through the commercials, right? Kitchen Nightmares, I might like watching Kitchen Nightmares. Shout out to anybody if they watch Kitchen Nightmares, right? But I record that. I don't watch that live. I record it, and then I go ahead and I fast forward through all the commercials. So think about this for a moment, right? Sports, you want to watch it live. Like if I want to see the game, I want to see the game live. Like I don't want to risk seeing it on social media what the score was or on ESPN or anywhere like that. And so you got to be there for the moment in sports. It's like I saw this live. Like that's the coolest part about sports, right? And so that's a beautiful thing about Fubo is they've attracted that. So ultimately the stock, even if let's say the stock's $4 or $5, it's still a cheap joke price. I think there's a lot of companies out there that would be interested in buying out of Fubo, especially given the fact that their losses are coming way down. They could put themselves in the position where in 2024 they might have some quarters that are, let's call it, very close to break even in 2024. I think there could be a lot of folks out there that want to buy out Fubo. And I'm talking about a lot of big tech companies, because you can't just replicate that overnight. What they built there, the customer base, the loyalty, everything they got going on, right? The systems. And so I think, I don't know, man. We'll see what happens. I hope they don't sell. I want to see Fubo become a much bigger company and giant in the space over time. And one of the other beautiful things about Fubo that I didn't mention here is, think back to the satellite days and the cable days, right? Back in those days, they had to send actual humans to your home. They had to go put a satellite dish on your roof and get the ladders out and then run the cable lines all through your walls and drill here and drill there. And there's a guy there for hours at your apartment or your house or whatever, right? And my first apartment I got Dish Network, and the guy came and installed it. It took him several hours, right? Fubo doesn't have any of that. Fubo, you want it, you got it now. And so I think what's going to happen with Fubo is I think they're going to build a lot more profitable over this next many years than any of the old school companies were. Any of those cable companies, any of those satellite companies. And so we'll see. It's a very speculative stock, certainly, but I think it's got a pretty extraordinary opportunity over this next few years, okay? Now, next one up here, number 6 of these 6 stocks that I will likely be buying in the month of November of 2023 is, you're going to like this one, might make you a little hungry, I'm warning you, Cheesecake Factory. Cheesecake Factory, number 6 of 6 stocks. So Cheesecake Factory, if you don't know Cheesecake Factory, what the heck? What type of rock are you hiding under, okay? Cheesecake Factory, you got to go to Cheesecake Factory, okay? That's their most successful restaurant chain, obviously, and one of the most successful restaurant chains in the history of the world. Then they own North Italia, which is an Italian brand that, maybe a little bit higher end. Certainly more higher end than like an Olive Garden or something like that, but that's something I could see huge potential with long term. And people like to drink at North Italia, and they drink way too damn much at North Italia, okay? I'm just telling you, I've seen some things at the Summerlin North Italia a few times. I've seen some things, okay? That's all I'm going to say about that. Then they own these other brands, Flower Child, Flyby, which is like a pizza concept. They own Culinary Dropout. If you live in Arizona, especially North Scottsdale, maybe you've been to the Culinary Dropout over there. They own the Henry, Blanco, Doughbird, and a few other brands as well. And so with those brands, they could do a couple things. They could either, maybe those are the next North Italias, the next Cheesecake Factories, and they can expand those around the United States. Or let's say there's a brand that they're like, this isn't really quite a fit for us. They can sell it off over time and, hey, we'll sell this brand off for $5 million, $10 million, $20 million, whatever, right? So Cheesecake Factory is simple. It's a valuation play. That's all it is. It's a valuation play. The valuation is extremely compelling. Trading about 10 times, 11 times this year's expected numbers, 9.5 times next year's numbers. It's just cheap stock, 3% dividend yield. It's easy. It's an easy buy. It's an easy buy for me overall in regards to Cheesecake Factory. And very bullish on that one over time. I appreciate everybody joining me as always. Thank you so much for being here, folks. Thank you for being subscribed to the channel. If you're looking to apply to join my private group, get access to all my different courses, learn everything I got up here directly to you, plus be part of our Discord chat with the 6- and 7-figure members and myself and everybody else, then apply with the pinned comment down there, and we'll see if we can get you in there either this week or next week. Much love and have a great day.